Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Friday afternoon, we have Ben Jones, Senior Index Specialist with Nasdaq Index Research, to discuss the Nasdaq-100 equal-weighted and cap-rated indexes. Ben, it's great to see you as always. And your first slide caught my eye because the question is, what do politics have to do with indexes?
Well, they have a lot, at least in terms of explaining kind of the differences between an equal-weighted index and a cap-weighted index. And this is, I think, a good picture to use when you're trying to look at the differences between, an equal-weighted index versus a cap-weighted index. And, for us, based in Richmond, Virginia, we just have to drive up I-95 and go to Washington, D.C. and look at the U.S. Senate and the U.S. House of Representatives to really explain the difference. So if you think about a traditional index, a cap-weighted index, let's say, like the Nasdaq-100, it is cap-weighted. It's kind of like the House of Representatives, right? Where, in the House of Representatives, the largest states get the most congressmen or congresswomen, right? Think California, Florida, New York, Texas, right? The small states with the lowest, population, let's say like Wyoming and Rhode Island, only have a few representatives, right? So that's cap weighted. In the market, those indexes that are cap weighted are going to overweight the largest companies. So Apple and Amazon are going to have the largest weighting in the Nasdaq-100. But what we see on the equal weighted side is where, all companies and all states are created equal, right? Just like the U.S. Senate, where both, Rhode Island and California have the same number of senators, right? 2. And so if we think about an equal weighted index, it's the same way where Amazon is treated no differently than, let's say, Apple, or Apple is treated no differently than Zoom, and Zoom is treated no differently than, let's say Alphabet or Google, right? They each have the same weighting in that index. So if you're trying to think of the differences between an equal-weighted index and a cap-weighted index, just think of U.S. Congress.
And Ben, are there any differences in terms of industry exposure?
Yeah, I think that's what's really interesting is that when you start to look underneath the hood of these two indexes, let's say the Nasdaq-100 equal-weighted, right, where all those companies have the same weight, Amazon and let's say Google or PayPal, they all have the same weighting, versus the Nasdaq-100 cap-weighted, where the largest companies are going to have a higher weighting. You start to uncover some differences in industry exposure, right? And I think the biggest difference is the technology weighting decreases when you equal weight this basket in the Nasdaq-100, and we start to see the healthcare exposure and the industrial exposure increase in the equal weighted version, right? And so I think that's important for those that are listening, is that while the Nasdaq-100 equal weighted owns or is comprised of the same 100 companies in the Nasdaq-100 cap weighted, there are going to be some differences from an industry exposure standpoint.
And Ben, if we look at the next chart here, the one-year returns aren't that vastly different. I was surprised to see that.
Yeah, it's fascinating, right? I mean, if you look at this, return stream going back in time, and this looks at basically looking at 12 months of return. And so you include, last summer and last fall in 2020, we're at the same destination, right? We've basically had the same performance over the past 12 months. But the key is, looking at this chart, you can see that there are some differences, right? You can see, in that growth rally in the summer of 2020, the Nasdaq-100, the traditional one, the cap-weighted one, was outperforming, right? That's when you really saw those large cap tech names, think Apple, Microsoft, Amazon, really perform well. But then we started to see it flip a little bit. We saw the equal-weighted version start to pick up some steam, especially after the election. We started to see some of those smaller sized companies within the Nasdaq-100 start to perform better. When we started to see some other sectors and industries start to perform better, think industrials, think healthcare. And so that's why you can see some differences in the returns, because while they are comprised of the same companies, the weightings are different, which means you're going to have a different return profile over time.
I would imagine the volatility reading in the equal weight is a little bit lower than the cap weighted one as well. And Ben, to wrap up here, what ETFs track the Nasdaq-100 equal weighted index?
Yeah, so there's 2 ETFs that track this index. You have the First Trust Nasdaq-100 equal weighted index, index fund, and then you have the Direction Nasdaq-100 equal weighted index ETF QQQE. The First Trust one is QQEW.
All right. Appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.